Alright, welcome back to MMG. First of all, not financial advice. Consult your financial advisor. I'm not a licensed financial advisor. This is more about me trading, teaching you guys how to trade, and listening to me rant. Could be completely wrong. Do not invest in anything you're not willing to lose or lose sleep over. Equities, extremely volatile, extremely risky. Know what you're doing. Consult your financial advisor before doing anything. Alright, so trade deal. Phase 1 completed. Chinese, like 11 p.m. at night, they had like a press conference. So Trump made some trade deal, some advancement, or whatever. So the farmers are going to get some beans, or Chinese are going to buy some agricultural goods. I'm kind of wondering and questioning, before the trade war, right? Were things, is it just going back to the way things were? Or, obviously Trump's, he's trying to get the Chinese to buy a lot of agricultural goods, because that's what he promised his voting base, right? And that's what he's trying to do, is revive the... But the thing with these deals are, you make a deal with the Chinese, that doesn't mean it's going to last forever. I guarantee you it won't. So there's also deals for like mineral rights, this and that. And I guess that'll help the economy. I don't really know. The NAFTA deal, he changed NAFTA to the, whatever he called it, the USMC something. The trade agreement with South America. Here's the thing. I'm a libertarian. You know what free trade is? You don't need deals. You don't need any politician or president making a deal. The free market just does it, right? Now, yeah, foreign countries could outcompete the U.S. because they have cheaper labor, they have less regulations and less taxes, so, the U.S. isn't competitive anymore. Now, during the Industrial Revolution, the U.S. regulations, they were almost non-existent. Taxes were much lower, and the U.S. was leading the Industrial Revolution, right? And there was much more freedom back then. And the dollar was actually, there was gold backing to it. So those savings is what grows the economy, not spending, not what the Keynesians believe. Austrian economics is people who save money are responsible, right? And then they take that money, and then the bank either through CDs gives you interest, right, for keeping it with the bank, and then the money in the bank are bank reserves, and then the bank can lend out more money. They don't lend out your money. They create credit on top of your money. It's fractional reserve lending. They make money out of thin air. And then that money goes into investing in the companies, or people who save money usually invest it or create a business with it or something. And then that all creates jobs and creates more business and more, companies, so the economy expands. All right, so where was I going with this? I don't even know. The trade deal, is it going to make the markets go higher and higher and higher? I don't think so. I think buy the rumor, sell the fact's going to happen. And, I'm going to go into TA towards the end of this video. For now, let's just cover some news. And then I'll do some TA. I'm going to try to make this, a reasonably short video. I'll try. So what's this? U.S. equity valuations creep into dot-com bubble territory for the first time in 20 years. Zero Hedge article. Maximum support for equities, but yeah, the EBITDA ratio to debt, future earnings and future revenue is already priced in. It was priced in like 2 years ago. And the profit margins are shrinking. revenue and the EBITDA, the margins are shrinking as the price of the stocks keep going higher and higher. So price to earnings ratio and all the other metrics, it's extremely far-fetched. Like, it's stretched like 10 years into the future. Can the markets just keep going higher and higher? I guess if the Fed keeps lowering rates and just does QE without even a correction to the market, sure. But it's gonna go parabolic at that point, and then the market cap, just to keep the momentum going, you have to inject multiples of liquidity upon, like, it's compounding. To make a market cap, the market cap of the markets now are so huge, it's gonna just take trillions just to get another like 20%, another 50% to the market, something like that, right? Just tens of trillions. So the higher it goes, the less cash and liquidity there is, and less money can go into the market, because eventually the markets run out of money, right? Volume, investors. And once it runs out of investors, everyone's all in. The only way is back down. So it's taking the stairs up and elevator back down. That's why that happens. When markets correct and pull back, it happens quickly. So let's say you could have like 4 months of just upside price action, right? And then the correction will last 4 days. And it wipes out, let's say 70% of the market going up for 4 months, right? But it could wipe it out in like 3 days, all the upside. So Fed brainwashing on net wealth in one picture. So ever since Nixon took us off the gold standard, assets and net worth in the U.S. has exploded. Liabilities, they've also increased, but not that bad. I mean, so let's take a look at this. Assets, 130 trillion, that's with a T for the U.S. Liabilities are only at 16.4 trillion. Now, these numbers are all skewed because we're in a bubble, right? So a lot of that, asset wealth could get wiped out real quick because everything's in an asset bubble. Everything's overvalued. Net worth is 113 trillion minus liabilities. Population in the U.S. is at 327 million in 2018, so it's probably at 330, somewhere around there. UK is only at 66. Interesting. So 18 and older population is 254 million. Majority, of course. Average net worth, 18 plus, 18 years age plus, is 448,000. Now, a lot of you are like, I don't have 448,000. And I don't know anyone who does. Well, that's because only 10% of the population own 90% of the asset wealth. And the bottom 10%, the bottom 90% of people, us plebs, we own all the liabilities. They own all the assets. Why is there such a, inequality when it comes to wealth? Well, it's because of central banking, right? And pumping cheap money into the markets makes stocks go up. Who tends to own a lot of stocks? Well, the upper middle class. Now, a lot of baby boomers do have 488,000, but that's like their retirement. So this probably includes their, 401ks, IRAs, and pensions. So it's all the boomers. That's why it's the top 10%, not the top 1. So all the upper middle class boomers and entrepreneurs, and then the super elite. Now, I'm not saying the boomers are bad people or the entrepreneurs are bad or anything. There's way too much envy in this world. If you're envious you're never going to be successful in your life, ever. And it's just toxic. It's just going to eat you alive if you envy anyone for their success. Most people work really, really hard, took all the risks in the world, and you didn't. If you're a loser, you're a loser. But if you're envy envy leads to the worst types of things in this world. Envy leads to like communism, that leads to like large portions of the populations, just getting wiped out. So that's where envy leads. It's like one of devil's number one tools. Because no one sees the story behind the guy who drives the really nice car. He sacrifices a lot, like works 80-hour weeks, works really hard, and he earned it. You didn't. That's why I don't want to go down this, spiel. I'll get pretty mad. Like, my cars have been keyed. I've experienced so much envy, and it's really disgusting. Like, people like that shouldn't exist. That's what's wrong with the world today. And, a lot of things are pushing people towards that way because other people are going to benefit off of it. The super elite, the 1% of the 1%. Those people, But the 1%, you guys need to understand, is every entrepreneur. The people that make the world spin so you could have nice things, yeah, they're all 1%. Like, if you have like $250,000, I think you're in top 5%. Because most people have like no savings. And even the people with retirement accounts, they don't even have enough to retire. So, by the way, all the cheap credit, it goes to the richest because they have the collateral, they have the credit, and they're the ones who could borrow the money. The plebs, the only type of loans you guys get are the bad ones, like loans for cars, mortgages, because you need them to buy big ticket items, which is unfortunate. And they know that, so they'll take advantage of you. And a lot of people are irresponsible, and they'll sign the dotted line. Most people live beyond their means, so people need to look in the mirror. All right, Trump, no new tariffs. September tariffs cut in half. All other tariffs remain. Phase 2 negotiations begin immediately. So phase 1's done. Now phase 2, then phase 3, then all the phases until the end of 2020, right? It's going to be annoying. And the algos and the tweets are going to keep pushing the markets higher. So, listen, like I said, NAFTA, that trade deal, on the surface, it looks great. If you dig deeper, so he changed NAFTA to the USMC something. It's not really anything different. It's like NAFTA light. So it's like he's half-assing everything and then like convincing the public that it's so great and so awesome. And I'm a libertarian. I like free trade. Free trade would work for the US if we were competitive. But we're not because of regulations. Right? And well, he did lower the corporate tax, which is positive, but he could lower it much more. Not that I want to support the monopoly corporations, I don't. But that's just how things work. I mean, the companies won't leave and go to other parts of the world if it benefits them to stay here because of lower regulations and taxes. Although they would leave anyways because of the cheap labor and just logistically it would. They need to build plants all around the world, the internationals. All right, here's the repo market. Repos are going back up. And That's about it for that. There was another repo article. They increased repos yesterday. The central bank lifted its limit for the operations scheduled between December 31st and January 2nd to 150 billion from 120 billion, according to Thursday's release. And they'll probably do even more than that. So, I mean, they're doing over 500 billion a month. Yeah, they roll over, they expire, right? And the money gets back, and then it's just going to be a rotate. The Fed's just going to rotate cash. And banks are going to take the cash, lend money, do whatever, try to make more to build their cash reserves. And they'll just keep doing this. But the Fed's balance sheet is what you need to watch. And that is expanding. So, the gold options market saw a 1.75 million options trade, a bet that gold's going to go to 4,000 an ounce by 2021. That's a huge bet. Some people are like, well, it's only 1.75 million. Yeah, well, with this options trade, when you could get gold at 3.5 an ounce, $3.50, the upside is huge. So a whale bet this because he probably has a lot more money. They might know something we don't know. I don't know. Maybe I'll put on an option trade. I probably should. Of course, it's not going to be anything near that. It'll be like $100. I think 2,700 would be a good price range. Not financial advice or anything. I'm just guessing, or I'm just talking out loud. I think that's more realistic than 4,000, but someone thinks 4,000 by 2021. Of course, you could always sell an option before it expires. Oh yeah, by the way, there's time decay. If the price goes against you, you lose a lot of money on options. You could lose more than what you bet, than your principal. And if the price just trades sideways the entire time the option's open, it could expire worthless. But you shouldn't be trading options if you're not really experienced. Yeah, so what else? The last time we had such a dramatic improvement in sentiment was early 2008. Yeah, so the VIX. Let's start going to some charts, guys. Well, before I do, there's one more news I need to cover. The VIX is like at all-time lows again, and look at this chart. The last time it spiked and then went back down was right before the Great Recession of 2008 and 9. Yeah, this looks eerily similar, and this goes perfectly aligned with my technical analysis that says 6 more months maybe of upside, and then finally the market's going to correct in 2020. And it just seems like Trump could pull hats out of his hat nonstop, but I think 2020 still, we're going to get the big correction, or the beginning. We're going to get a huge correction. That doesn't mean the market's going to fully crash or anything. It's just going to be a big correction, another 20% down, right? And he could still get, that's not going to be enough. It's not going to affect the average person just yet, a 20% correction. And then you'll get that giant dead cat bounce, and then in 2021, 2022, it's going to fall further down, right? Yeah, Fed's balance sheets, it's really starting to rocket back up. 2008, that's when it first started moving up. It's moving up again. It's another red flag indicator. All right, let's go to charts. Where am I at on time? Just past 20 minutes. All right. So the dollar continues to fall. Like I said in my last video, I expect it to go down into the 95 area, the dollar index versus other currencies. Brexit, right? Boris won. So the pound definitely, or sterling, definitely strengthened, not the sterling, pound. And that's not good for the dollar. And maybe some Chinese sold their dollars because of the trade deal. But the dollar really started selling off right after Powell's conference Wednesday, right? Today's Friday. Today's day. I don't know. So yeah. Gold rallied today. So let's take a look at the 10-year yield gold in the S&P 500. Blue line is the 10-year yield. Green line is the S&P 500. Orange line is gold. The green line goes much higher. I can't pull down the other lines for some reason. So you guys can see it. I expect the 10-year to further fall, especially with the repo operations, because literally Powell said he was going to do that during his last conference. That's another reason why gold took off overnight. Overnight, gold went to 1492. That's a big move for gold. So I expect the 10-year to drop. Can the markets go higher for a little bit longer? Sure. And metals could go higher with the market, and the dollar could fall. So the dollar falling actually helps the markets, the equity markets, a little bit. What's next? Let's go to the S&P 500. All right, so let me zoom out here. Let me go to a monthly chart. Here's the monthly chart. This channel, it goes from the beginning of this bull market back in 2009. And currently on the monthly, we're on a 7 count. So maybe 2 more months of upside, according to the TDI indicator. Also, if you pay attention, look at these moving averages. Look at the space between them, that spread. Look at that. That's extremely widening. They eventually always have to revert to the mean, like they did right here, right? Sorta. So this bull market, besides the fact that it's the longest running bull market in the US history, it's a bit overextended. Can it still go higher? Yes, guys. Here's the thing. I don't know to what extent they're gonna push this market higher with the trade talks, the Fed with the repo market. What if they start QE4 and then the market makes new all-time highs? Here, let me show you guys something. What if the market pulls back to the bottom of this channel? They come out with a ton of QE, like helicopter MMT type money. And then boom, it breaks out of the channel and we get a huge melt up. I'm not saying this is going to happen. I'm just giving you a scenario. And then a blow off top and then it crashes. That's a scenario. As of right now, I can change my mind. It all depends on what the Fed's doing, what they're doing. As of right now, I still expect a pullback or a correction, at least to the bottom of this channel. Let's go to a weekly chart. So I'm still looking for a pullback to 23.6, but honestly, I think it's going to be 38.2. That fib retracement, This moving average sort of line up in that area right at the bottom of this channel. So it would be healthy and normal for the market to pull back. Especially if they want it to go higher, it has to pull back. It can't, because it's going to run out of momentum. You're going to run out of buyers. If the trade deals are going better, maybe some Chinese capital flight, it will stop coming to the U.S. I don't know. Either way, I'm still expecting that pullback. By the way, with this trade phase 1 deal going well, it's a perfect time to sell, because buy the rumor, sell the fact. So let me show you something else. The price is broken out of the top of this channel. But as we can see here, every time it does that, it's a false breakout, and then it gets rejected and falls back inside the channel. I expect that to happen again. Because there's no other reason why I wouldn't. Also, the TDI run an 8 count. So next week, the corrections should start, or maybe the week after, within the next 2 weeks. It also kind of lines up with that, with the Zoltan article, right? The repo market and all that. And the currency swaps. There is something going on with the currency swaps right now. Well, there's definitely something going on because Brexit, right? The pound just rallied. The dollar just started falling in a big way. There's a lot of leveraged funds out there who were maybe short the pound and long the dollar. Here's the NASDAQ E-mini, 100 E-mini. It's on the 6 count on the daily here. I didn't finish the S&P. Let me go back. So that's the weekly. Let's just go to a daily real quick. The oscillators are all overextended. It's a 6 count as well on the daily. So this goes to a 9 count. Rarely goes to a 13 count. But so 7, 8, 9, 3 more days of possible upside. So midway next week. Oscillators, they're neutral on the daily, but they're very overextended on the weekly and the 3-day chart. So it's really overdue for a correction. Same with the NASDAQ. Here's the financials. Here's what's fascinating. The financials ETFs, they've rallied around 36-37% since that bottom at the beginning of this year. That's a huge, huge move up, even for an entire year for financials. All right. And they're due for a pullback or a correction. Something. Russell 2000. This index has not made a new high. It's 2,000 mid-sized companies. It's a better gauge of the real economy, the U.S. economy. And it's the weakest of all the indices. And it's actually the most important. And this tracks the real health of the economy. So it's overdue for a correction and pullback. I thought it would pull back sooner. But obviously the tweets, the trade, and all of that's been pushing the markets higher. It's crazy. Keep recycling the same thing over and over again. People keep buying it. Oh, I forgot. Check out the retail sales for this holiday season. They're fairly weak. Very weak, actually. So, for a holiday season, so just pointing that out. Not good. Alright. Fangs. The fangs actually look positive compared to the other indices. Well, this is an ETF, right? This tracks the FANG stocks. Facebook, Amazon, Netflix, Google. And then you could include other ones with it, but yeah, the FANGs might carry the market a little bit higher into next week, but still, I still expect buy the rumor, sell the fact, and I expect momentum to run out. Because It has to. It just can't keep going up. It's pretty parabolic. Now, that's not a good enough excuse to put a trade on. I'm just saying I'd rather be on the sidelines than chase the last 5 to 10% into the end of the year. And I'm all in on the mining stocks. They're doing great. So I don't really care if the markets keep going higher. I'm just looking to short a few things or buy an inverse ETF to the markets when they do correct. Here's the Dow transports. Transports are like freights, right? Semis carrying goods. So, unfortunately, I think it moves with equities, which is not right. It should be based off of fundamentals. But if transports falls below, I'd say 10,000, then, the economy's in big trouble. Natural gas. It's very interesting. When I was younger, much younger, like back in 2008 and 9, I knew about, what was it called? Escape me. One of the natural gas companies, and I could have made a killing, but I didn't do it. Could have taken some student loan money and bought some stocks. What's this? This is one of the mining stocks. I don't think you can see the ticker. Good. This went up over 1,000%. 1,100%. Yeah, 1,100%. Life changing, right? And the mining stocks aren't even in a bull market yet. It's just the beginning. You've seen nothing yet. There was another one 20 days ago. I said buy this because it was oversold. Went up 150% in 20 days. Okay, so that's pretty much it for now. Did I talk about the $4,000 option? Yeah, I believe I did. I feel like I'm missing something. Did I talk about that? Someone bet 1.7 million for 4,000 gold by 2021. Yeah, I think I did. Probably did. I feel like there was another chart I wanted to show you guys. I'll do another Bitcoin video soon. Either way, I would say wait and see next week if we get that correction. I believe we will in the equities. And I think it'll be a decent sized correction by the rumor sell the fact. It's just over, I mean, TA wise, it's due for a correction, alright guys? And yeah, and I expect metals. I haven't done TA on gold, have I? That's what I'm forgetting. Expect metals to rally. Now, what is concerning about gold is, according to the TDI, my heat map here, this is a monthly chart. The price really needs to get above 1530 by the end of this month for this 9 sell not to come true, and then we get a 1 to 4 month pullback. So I would rather the price go a little bit higher. Probably can't see that. Hold on. Then the correction to start now. All right. I still think it could run to 16, maybe even 1670, something like that, in the next few weeks and months, or maybe a little high. I don't know. And then we'll get a decent correction in metals. And when that correction comes, it'll probably be because of the stock market, right? Because remember, I have a huge sell signal on the S&P on the, I believe, the 6-month chart. As you can see right here. And it's been pretty accurate for the last recessions. Let's just take a look at the 1 month real quick. Curious. It's on a 7 count. Yeah, so maybe 2-3 more months of upside, but then that might be the all-time high. I think we'll hit all-time high in 2020. I don't think we'll get a market crash in 2020. I think they could keep the market from crashing in 2020. I just think we'll put in the top and get a decent correction, like another 20% or something like that, right? So look at this. I mean, this is the S&P 500. This is how every index looks like right now for equities. And yes, usually you get that blow off top, right? So it can go a little bit higher. So maybe in the next few months, it'll do this, and then finally, boom, get that giant bull trap. You know, Trump gets reelected, and then down. And then you do the typical bubble chart. The giant fractal. Right? That sounds like a good plan. This is what I think will happen. I'm not that confident in it, okay? I'd give it a 60% probability. But this is what I'm looking for. So that's about it. 15% off. Go to my website. Smash some likes. Leave anything in the comment section. Let me know in the comment section what you want me to cover. In my next video tomorrow, I'll talk about the milkshake theory and the possibilities with that. I'll make a Bitcoin video talking about the longs. And that's about it for this weekend. I need to do research. Go to my website. Check out all the links below this video in the description. Join us in the free Telegram chat groups. I upload stuff daily in the newsroom that I find interesting or informative. That's about it. Until next time.